In 2019, Saudi Aramco did the biggest IPO in history. They raised $29 billion. That record stood for 7 years. Until now, SpaceX just filed to raise $75 billion at a valuation of $1.75 to $1.8 trillion. To put that in perspective, that is bigger than the entire GDP of Australia. And here is what makes this different from every other IPO you have ever heard about. Elon Musk wants retail investors, ordinary people, to get 30% of the shares. On June 11th, SpaceX is hosting 1,500 individual investors from the US, UK, EU, Australia, Canada, Japan, and South Korea. That is not normal. That has never happened at this scale before. So today, we break down exactly what SpaceX is, what the numbers actually say, what the risks are that Wall Street does not want to talk about, and how a regular investor can actually get access. Let's go. Most people think SpaceX is a rocket company. It is not. Not anymore. In 2025, SpaceX generated $18.7 billion in revenue, and that figure covers 3 completely different businesses stitched together under one roof. Here is how it breaks down. Starlink, the satellite internet business, generated $11.4 billion, 61% of the entire company. The rocket launch business, Falcon 9, Falcon Heavy, generated roughly $4 billion. And then there is the new piece, the one that changes everything. In February 2026, SpaceX acquired xAI, Elon Musk's artificial intelligence company, the one behind Grok. The deal valued the combined entity at $1.25 trillion. xAI added roughly $3 billion in revenue, but it also added something else, and we will get to that in a moment. So what you are buying in this IPO is not a rocket company. You are buying the world's largest satellite internet network, the world's dominant commercial launch provider, and an AI company competing directly with OpenAI. SpaceX is claiming a total addressable market of $28.5 trillion. That is not a typo, $28.5 trillion. Whether you believe that number or not, and we will come back to that, the scale of what SpaceX is attempting is unlike anything that has ever gone public. Now let us talk about the actual financials, because the headline numbers look incredible, and the fine print is complicated. Revenue growth has been extraordinary, from $4.6 billion in 2022 to $18.7 billion in 2025. That is a 33% increase just from 2024 to 2025. Starlink is the engine behind all of it. 10,000 subscribers in 2021, 1 million in 2022, 10.3 million by March 2026, in 160 countries. And Starlink is genuinely profitable, $4.4 billion in operating income in 2025, a 39% operating margin. That is better than most tech companies. But the company posted a net loss of $4.94 billion in 2025. In 2024, it was profitable, $791 million in net income. What changed? xAI. The AI segment burned $6.4 billion in 2025, building data centers, training Grok, constructing what SpaceX calls Colossus, an orbital AI computing infrastructure. So the picture is this. Starlink makes $4.4 billion. AI loses $6.4 billion. Starlink is subsidizing the AI bet. One more number to watch. Starlink's average revenue per user has been falling from $99 per month in 2023 to $66 per month in early 2026. More subscribers, lower price per subscriber. That is a volume game, and it only works if the subscriber count keeps climbing. Here is what Wall Street's IPO hype machine will not put on the front page. Risk 1: Starship. SpaceX's entire long-term strategy depends on Starship, the next-generation rocket that can carry 200 tons to orbit. The company is spending $3 billion a year on its development. By early 2026, it has completed 11 full-stack test flights. The success rate on booster recovery is around 40%. If Starship faces further delays, which is entirely possible, the next-generation Starlink satellites that need it cannot launch, the orbital AI data centers cannot be built, and the entire long-term revenue case gets pushed back by years. Risk 2. Valuation. At roughly $1.8 trillion, SpaceX has a price-to-sales ratio of close to 95 times. That means you are paying nearly $100 for every $1 of revenue. Even NVIDIA, the AI darling of the last 3 years, does not trade at that multiple. Morningstar has already put a number on it. They value SpaceX at $780 billion, roughly half the IPO price. They are calling it significantly overvalued and say better buying opportunities will come after the hype settles. Risk 3. The Musk factor. SpaceX, XAI, Tesla, X. They are all interconnected in ways that are unusual even by Silicon Valley standards. The S1 discloses that XAI alone bought $506 million of Tesla Megapacks in 2025 to power its data centers. SpaceX separately spent $131 million buying Cybertrucks at full retail price with no bulk discount. And through his Class B shares, Musk controls roughly 82% of voting power after the listing. One man, one vote, multiple trillion-dollar entities. Institutional investors will scrutinize this closely. Risk 4. The 30% retail allocation. This sounds like a gift. It might also be a signal. When a company goes out of its way to court retail investors at IPO, history suggests you should ask why institutional investors are not taking every available share themselves. These are not reasons to avoid it. They are reasons to size your position carefully. So, you want exposure to the space economy. How do you actually do it? 3 ways, in order of risk. Option 1. Wait for SpaceX directly. The roadshow began June 4th. Pricing is June 11th. Trading opens on NASDAQ under the ticker SBCX on June 12th. Robinhood, Fidelity, Charles Schwab, SoFi, and E*Trade are all named in the S1 as retail distribution channels. If you have an account at any of these platforms, you can submit a non-binding indication of interest, essentially a request for shares, before the listing. Robinhood requires no minimum balance. Fidelity sets a higher bar. The risk, IPO day buyers often overpay. The hype is already priced in. Saudi Aramco, for context, raised $29 billion in the biggest IPO of its time, and it is still trading below its IPO price years later. Option 2. Space ETFs. The Space Innovators ETF, ticker NASA, already holds 6.7% in SpaceX alongside Rocket Lab and ASD SpaceMobile. The Procure Space ETF, ticker UFO, holds 54 names across the space ecosystem. It was up 33% since SpaceX filed its S1 in April, though the Blue Origin explosion in late May has since pulled the sector back sharply. ETFs give you diversified exposure without betting everything on one IPO day price. Option 3. The Proxy plays. Since SpaceX filed its confidential S1 on April 1st, Rocket Lab is up around 89%. Intuitive Machines is up over 100%. ASD SpaceMobile is up roughly 30%. These moves have already happened, and they have already partially reversed. On May 28th, Blue Origin's New Glenn rocket exploded on the launch pad at Cape Canaveral during a static fire test. No one was hurt, but the market reacted immediately. Rocket Lab fell nearly 15% in a single session, even though Blue Origin has no direct operational link to Rocket Lab whatsoever. Space stocks move on sentiment. That cuts both ways. The honest summary: SpaceX is a genuinely extraordinary business. The IPO price reflects extraordinary expectations. History says the best returns often come after the hype, not during it. Here is the thing about the SpaceX IPO that goes beyond the numbers. For years, the space economy was a story for governments and billionaires. Ordinary investors had no seat at the table. If SpaceX's IPO works, at this scale, with this retail allocation, it changes what private capital can own. Orbital AI infrastructure, satellite internet covering 160 countries, the rocket that will eventually land humans on Mars. That is what is being offered. Whether the price is right today is a separate question. The space economy is projected to reach $1 trillion by 2040. SpaceX's IPO is the moment that story becomes impossible for investors to ignore. If this changed how you think about what you can own as an investor, hit like. It genuinely helps the channel grow. Subscribe. Next week we are looking at another market most people are sleeping on. And drop a comment. Are you buying SpaceX on IPO day or waiting for the hype to cool down? I will read every single one.